Hi guys, welcome to the weekly mentoring video. It's Monday, 15th of March 2021, and we're having very interesting session today. I will be focusing mostly on the portfolio management and looking at our trades and maybe enter some new trades. I don't know, we'll see. We have quite some items in the portfolio. Before we go there, I always start actually by showing you this disclaimer here that this video is for informational, educational purposes only. So I'm not here to give you any advice. I'm here to educate you about option trading and how to build your position, about investing, how to build your portfolio, how to use option trading to create amazing investments that are long-term, how to use option trading to generate cash flow, all these kind of things. I'm teaching you that, but we're trading here a paper account, and it's, trading is risky. So you always need to educate yourself before you go into any live trading yourself. And here, these videos are only for education purposes. So just keep that in mind. And if you agree with this, I checked that, and I'm going to remove this disclaimer here, and we're going to go to the portfolio. And we're going to see some items in this portfolio. How did we perform comparing to the last week where we were quite beaten up? Remember, I told you last week, the portfolio lost basically all the gains from beginning of the year till last week. How did that happen? It happened because market started correcting and tech stocks got beaten up. There was a rise in yields in 10-year bonds, which beaten up gold, and we had a lot of positions on gold, which now recovered, and you will see where we are right now. And the market did big swing, and volatility on the market is crazy these days. The market goes up and down, and it's really unexpected to, we don't know where it's going to go next. Therefore, I was playing around with some hedges and also doing some technical analysis to know if I should stay in there and start closing my positions, reducing my portfolios. My conclusion was that let's see, and I set some critical levels on the charts to see where I should start buying the insurance, which would be probably in the MGC or MES futures, mostly MES, shorting those in order to hedge the portfolio because it has a very high delta. And this high delta means simply, let's just move all these NA positions to where they belong. I will put them, move to the group, and you will see what my delta is. Basically for this portfolio, I'm quite bullish, okay? And NA positions, I think there's quite a lot now. I'm missing these computations. Just don't work for my beta because I have beta weighted portfolio and SPY. So let's move all those to the NA group, and now it's still NA. Where do I have one more NA here? Move to group NA. So all NAs are here, and now I can see that without these positions, which actually definitely give a little bit more power here to the delta, I'm pretty bullish. So my delta is 290, meaning 1 point move on S&P means 290 plus in the portfolio. But if we start going down, that will mean 290 down. I have quite strong theta though, if you combine those two together. So let me disable the groups again, okay? You will see that my theta is around 520, which means this portfolio is bringing 520 per day, daily, to my pocket, okay? So theta was basically recovering my positions for the last week, plus also positive move on the market. You can see markets are now trading 390, 373, a little bit down today. I think so. Let's have a look. Yeah, they just dropped down a little bit. And overall, day gains for today are around $2,590, 2.6 almost. We still kind of like in this portfolio, PL open is low because of our position here on S&P 500, which is an insurance for which I paid long time ago, around 5K, and it's just been decaying, and now we have the loss 4K. I don't mind paying for insurance, therefore I keep it here. I recovered some of the cost of the insurance by selling some put options on it. So you see these little premiums here. That's basically recovering the cost of the total cost of the insurance, which is 5K around. So it'll be costing me for 4,500, something like this. And I'm okay, I'm gonna keep it here. And in case something drops really significantly, it still has 95 days in it. So we're prepared for the market correcting, possibly correcting. And I'm gonna keep it here. I'm just gonna stay in it. It doesn't cost me much money. It costs me $10 per day, more or less, right now. This will expire soon, so I might consider selling another 2 put contracts. Maybe I do this today, because in 4 days I don't think the markets will crash down to 330. So I could be selling some put contracts, recovering some more of this premium today. We can go and do that in a moment. Just to explain all these numbers. So overall PL year to date, we're back to 10K, as you can see. So last time we were actually negative 1K or something like this. So we recovered 11K from that losses. So again, we're positive for the year quite nicely. So basically 5K per month, per 2 months and a half, we're kind of like doing 10K. I'm expecting this number to rise a little bit in the upcoming days, because lots of these positions will expire this week, and you will see that we're going to keep a lot of premiums and we can open new positions for the next week. Whereas I'm going to be recording the video. I mean, exactly, it's not going to be next week. Actually, next week I'm going to have a little break from recording videos because I'm going to retreat for 11 days. So I'm going to be actually not active recording videos next week. So we'll skip this, but the portfolio will be working for us and I will hedge it properly in order to avoid any losses. I will be also observing it. I'm just not going to be doing videos. So next time we see us, it's going to be in the 2 weeks for this portfolio. So yeah, that's what I wanted to say. And probably in the next 2 weeks we're going to be having positions expiring. So today we will prepare a little bit for ourselves for the upcoming week. And also I will do some order here on SPY to reduce the cost of the insurance and go through the positions which are the most interesting ones. So before we do that, I just wanted to go quickly into the browser and see what's going on the market today. So stock market update, airline and casino stocks outperform. We see that S&P 500 is basically standing still. Dow and Nasdaq actually don't move as well. So on the industry watch, utilities, consumer staples, industrials are doing good. Financials, energy and materials are weak. Dow sets all new all-time highs. It mix open. Relative weakness in financial energy stocks. Relative weakness because we don't have a massive moves. However, there were quite interesting news actually recently, and they were around 10-year treasury yields. So this yield is rising, and that's really interesting because that's quite inflationary. So since Powell started talking about inflation, people start being in fear. Something is going on with the economy, like there is some inflation coming up, therefore we need a higher percentage on the yields. People start dumping the yields because obviously if you keep this currency and you borrow this currency to the country, and they keep it for 10 years and pay you 1.6% of interest, and inflation is high, well, you're going to be losing on this. That's a losing game. You don't want that, so they naturally start rising because people start selling it. However, I think Fed interfered and they started buying them back and introduce, they want to introduce something which is called, what is it called, something with yield control, whatever. They want to control this level of the percentage or return on the 10-year bond. And there are a couple of things associated with these bonds, 10-year bonds. As the yields are rising, this kind of negatively affects gold because gold doesn't pay any dividends. And people, if they believe the economy is strong and good, and US economy is supposed to be the strongest in the world, whatever. So absolutely, it becomes a nice deal for you to buy something which pays you more on your currency. So you want to hold it. So they're going to buy this because they get the return. However, it's a tricky game because if we printing currency like crazy and we introducing more inflation and Fed loses control over this and we run into a scenario where we get into a hyperinflation, well, then this does not matter really, because that's like absolutely nothing compared to the losses that you may take, when your currency goes to default. So in that case, it's a tricky game because if you would be invested in gold, gold would maintain its value. Even though it's dropping now, it doesn't pay a dividend, it doesn't matter so much because gold maintains value. So what was the interesting thing that I observed